one day, says the legend, there was a fire in the forest and all the animals are running away. All of them but one, the hummingbird. And the hummingbird will go to the lake to take a bit of water and drop it onto the fire. And it will go on and off, back and forth. And all the animals looking at him, they say, hummingbirds, what are you doing? Do you really think you're gonna stop the fire on your own? And he says, no, I know I will not, but at least I do my part. Welcome to this hummingbird talk, a talk where we have people talking about the good that they create on our planet, about people who will fly, run, and stand up to turn off the fire that is burning our home, that is burning our planet. We will welcome Eleonore tonight. So Eleonore, I need to make sure that I say it well. Eleonore Dachicourt is Head of Sustainability Wealth Management Asia at BNP Paribas. And we wanted to invite Eleonore tonight because as an impact entrepreneur, devoting my life and career to doing more to helping cities reducing their carbon footprint, I always wanted to understand more who are these people who sacrifice their life and career to do more for our environment, to do more for our climate. And Eleonore is definitely one of them. We will talk about, as we mentioned, innovation leadership, blending finance. We'll talk about sustainability and what's the future of sustainability mixed with finance. Listen carefully. There will be a lot of takeaways in this few minutes. You will be able to ask questions as well. We have some time in the end. If you feel like you want to ask questions before that, no problem. Just make sure that if you have if you are eating at the same time, just make sure that everybody can hear properly and understand properly. Obviously, if you want to eat in between, it's always better to do both. And as a way to start and to dive into the topic, I think it's always better to understand more about our speakers. So I will ask Eleonore, can you tell us more? What's your background? How did you start working in sustainability? And I would say, what's the trigger that made you work in sustainability and do what you're currently doing?
Sure. Thanks so much, Brice, and thanks, Misbah, for having me this evening. It's really cool to be here because usually it's a closed door, with PowerPoint slides. So being among art is, very inspiring, especially for the talk that we're going to have today. Yeah. So a bit about me. So I've only been in sustainability for the last 5 years. So although this is an expert talk, I don't really consider myself an expert. I've learned a lot in the last 5 years, but I've spent most of my career in asset and wealth management and more traditional investments. I started in London. I'm French, like a lot of French people, before Brexit, we would, move to London if we were in finance. And I started in alternative investments and hedge funds. I used to work for a Swiss bank, which is no longer. I mean, I'll let you, guess who that is.
Which one is it?
And I set up the hedge and advisory business for that bank. So I was advising high net worth individuals, family offices on their hedge fund investments. I got to meet the most brilliant minds in the industry, asset allocators, investors that are still around from, the large hedge fund managers. And then after the financial crisis, I moved to Asia, still stayed in asset and wealth management. I moved in marketing, fund distribution, more of a sales role. And I was distributing a lot of thematic equity funds, so aligned to the mega trends, to climate, digital health, health tech. And that's how I got interested in sustainability, because a lot of these funds were, and I only realized after, were tied to the SDGs. But back then, I didn't know what SDG was. I mean, it was very sad. I mean, I had very little knowledge about sustainability.
So which year was this?
So that was in 2016 until probably the COVID years. And in 2020, when, we all went into lockdown, we were in standstill, I got to do a lot of research on sustainability. And I had this kind of aha moment, this epiphany, because I understood all the trends that were kind of emerging, but I didn't understand the real business case behind sustainability. So that's when I started to connect all the dots, and I could see that not only was this aligned, to my values of, finding purpose, giving back, always being on your feet, because it's such a fast evolving space that you're always constantly learning. So that was very much aligned with my personality and my values. But also I could see the business case around sustainability, and how all, everyone from businesses to society, every stakeholders had to move in that direction. So that's when I started, to realize I needed to be fully into that space. And I moved into sustainability with my previous employer back then.
So you understood that that sustainability was very meaningful, and was very meaningful for the stakeholders of your company, because they will find a business, a business, I would say, a business reason behind it to invest more in sustainability.
Exactly. And I started to realize, the urgency of the climate crisis. I mean, it's not just climate, but it's different, factors, but really the climate is such a key topic. And I remember there was this FD article, I think it was probably in April of 2020, right in the middle of, the circuit breaker in Singapore, where they, analyzed the performance of a lot of ESG funds. Yeah. And it was a great stress test for the industry, because a lot of these funds were much more resilient and outperforming traditional investments. So again, it was adding to my, I was continuing to connect all the dots. There's a real business case behind sustainability, and clients are actually generating performance and potentially alpha by investing more sustainably.
So you realized this before sustainability become a trend, I would say, because it became quite a trend right after.
Well, it became a trend in Asia, but I think, and then I had the opportunity to move for a couple of years in Europe for that role, but it had started in Europe much earlier on the back of regulations, right? And so there was a lot of requirements for investors, corporates to align their business models, to start reporting sustainably, all the disclosures. But I think in Asia, Asia was still catching up. And now it's caught up a lot. But at the time, it was still, quite nascent for this region.
Yeah. Do you still see today that what you have seen before is still the case, or do you think it's even more than before?
In terms of
in terms of return on investment on sustainability funds?
Good question. So yes, I think 2020 until 2022 were fantastic years for sustainable investments. Yeah. Then you had the the energy crisis, or the invasion of Ukraine, and of course, a lot of those investments, especially in renewable energy, the energy transition theme, of course, suffered. But just like any, thematic investment, that can be cyclical, right? I mean, you had underperformance. So I think what happened is a lot of people put that specific underperformance in the same bucket as everything sustainable.
Yeah, yeah.
Which can be, it's a misconception, right? You really have to look at, the different underlying strategies. Just like when I was allocating to hedge fund strategies, I had to do all my due diligence on all the different investments. I think the same is true for sustainability. So you have to, it's not so much about beta, but you also have to be discerning, and there's nuance to be made between the different investments. But there's still a lot of potential from a performance perspective, for sustainable investments. Yeah. And we do a lot of, stress testing or an analysis of of all of different investments, and those that are sustainable have tended to outperform the non-sustainable.
Yeah. So we have, I know several investors in the room. So yes, sustainability is good for the business. Then after that, so you promoted sustainability inside your company, and this led you to the role that you have today, basically.
Yes. So my role today, so I sit within wealth management, and if you look at the financial sector, most European banks and now Asian banks and I mean, U.S. banks, we can talk about that later. But so the majority of banks will have committed to being net zero and at their own
by 2050.
By 2050. Yeah.
By 2050.
Yeah. Yeah. So for them, I mean, it's going to be very different than an oil and gas company, because for us, our own operations can be carbon neutral. I mean, it's much easier, right? Where we really need to, where we can really move the needle and where we become net zero is by addressing what we call scope 3. Yeah. So that's our clients. So on the corporate side, it will be corporates, that that bank with us. Yeah. On the asset and wealth management side, it will be private clients, family offices. So you wanted to...
Yeah. Scope 3, let's maybe detail it a little bit for the ones who don't know what it is.
I mean, and you can jump in here, but it will be all the indirect kind of emissions, right?
Indirect emissions. Yeah. So scope 1, 2 will be linked to your buildings, your operations overall, and scope 3, it's beyond this and
exactly.
everything.
So for a bank, typically it will be our credit book, our clients, the lending activity. So that's where we need to help our clients kind of decarbonize their own operations in order for us as a bank to become net zero.
To become net zero in 25 years. That's a hard stuff.
So what I do then coming back to your question, so what we do on the asset and wealth management, we accompany our clients in order to invest more sustainably. So in order to invest into what we call sustainable investments, ESG integrated thematic investments, and also impact investments.
Yeah. And so in your role, you work with family offices to invest better. And you work as well on green bonds. So family offices, they have obviously a lot of money to invest in. And for anyone who wants to invest, there is maybe some takeaways from this. So on your side, how do you help family offices to invest more sustainably, and how do you use green bonds in this effect?
Sure. So for us, our ultimate goal as a private bank is to make sure that all of our investments on our platform or have a sustainability angle. Yeah. So what we've done over the last 15 years is we've developed what we call our Clover evaluation. So we're able to assess not just bonds, but equity, hedge funds, real estate funds, the whole gamut of asset classes and investments, where they stand on a sustainability evaluation. And so it's a scale of 0 to 10 and 5, being sustainable. And we want to make sure that more and more of our solutions, ideally 100% of our solutions, will be rated 5 and above. So what we call sustainable. So that will include ESG integrated solutions, thematic. So like the energy transition, theme that I was referring to earlier, but also impact. Yeah. And so we want to have, that platform available for our clients, for them to be able to choose depending on the risk return, profile, appetite, their preferences, if they're tied to any specific SDGs, what they want to invest into.
Yeah. Okay.
On green bonds.
Green bonds.
Yes. So that's just one of the underlying solutions, right? Yeah. That our clients can.
So what are green bonds, and how do you use them?
Sure. So green bonds have been developing, pretty massively in the last few years. Yeah. So this will be the opportunity for the issuer, say a corporate, that has a specific green project in mind.
Yeah.
So they will earmark money for that specific green project.
Yeah.
For them to get the financing for that project, green project.
Yeah.
And so we'll work with them in order to lend them money and to assess the KPIs around that green project and how the impact that project is having.
Yeah. I as we are in a small room and I hear some sound on the back, I will maybe cut it here and ask if anybody has question in the audience. Anybody? Yes, Ben, go ahead. Yeah, go ahead.
So my question on sustainable investment is, can you do well by doing good, or do you have to take an impact on your performance because sustainable investment does not as well as traditional investment? So how is the correlation with sustainability, impact, and performance?
Good one. Can you do good for the planet and good for the wallet? Yeah.
So I think depending on what you invest into, yes, you have the potential to do well in your investments to generate performance by investing sustainably. So referring to what I was saying earlier, we've developed that methodology. And if you look at all of our investments that have been rated 5 and above, so that we consider sustainable, we've measured the performance, especially on a long-term horizon, and they've tended to outperform those that are rated less than 5, so that we consider not sustainable. So, I mean, it's difficult to aggregate everything, but yes, you have the opportunity to outperform. And then on the impact side, that's where you really have, more potential, because you're going to be typically investing into private markets, private equity, and there's a lot of research that shows, and especially with some of those measures that we invested into, that you can generate double-digit performance, so market rate, performance.
Double-digit per year.
Yeah, I mean IRR, yes.
Yeah. So yes, Ben, it's definitely possible to mix both.
But I think, that comes up a lot in the client conversations, that I have, and so a lot of people still in Asia, when they think sustainability, they'll think CSR, they'll think philanthropy, but it's not the same. And so that's also my role to kind of, debunk all those myths and misconceptions about sustainability, philanthropy, concessionary impact, non-concessionary CSR. So these are, sometimes we use those terms, interchangeably, and we shouldn't.
Yeah. And we see having more and more companies specialize in sustainability and startups as well. Obviously, I am in a good place to talk about this. Do you also recommend to invest in smaller businesses that have maybe a much higher potential for growth, much higher potential for returns, and obviously do good for the environment and for years and years to come?
Yeah. So I should mention, so as a bank, we invest $450 million of our own money. So that would be our balance sheet money.
That's a bit of money.
That's a bit of money into what we call impact. So that will be startups. So that could be your startup.
Very
maybe.
good. We need to talk more.
I can make the intro. So your startup or impact projects, impact funds, and 2 types of envelopes. So one we call concessionary.
Yeah.
So there, and to your question, we focus more on the impact rather than the performance, but also non-concessionary. So there, we're really looking at both the impact and the performance.
Okay.
So we have invested into different types of solutions and nature-based solutions.
Yeah.
In circularity and yeah.
Okay.
Now for clients, we tend to recommend more private equity impact funds.
Okay.
So a bit more mature and because we're quite conservative, but we've seen interest from a lot of clients' family offices for direct investments into startups, I'm sure businesses like yours. Maybe you can share a bit more about what you do, and I'm sure there's some potential.
Where we want to reduce the carbon footprint of our cities, and we want to go even beyond this. We want to develop the cities that we need for tomorrow. So basically, we're about to be 5 billion people living in cities, and how can we do that? How can we have a world that is livable for everybody in these circumstances? And so basically, it means that we need to have cities that consume much less energy, and that the air overall that we have in cities, the environment that we have in cities, are much more livable for everyone. One thing that I have seen 10 years ago is when I was living in Bangkok, in Thailand at that time, is that air conditioning represent a big part of our carbon footprint and our pollution in cities. So in the world, I have a little question for the audience. In the world, aircon represents 3% of our carbon emissions. So roughly the same as the aviation industry, right? So we often like to talk about aviation industry as something that is not good for our environment. Aircon is roughly the same. I'm not even talking about heating. I'm talking about air conditioning only. Does anybody know what is the carbon footprint of air conditioning in Singapore? In Singapore, little Q, it's more than 3%. It's more than 3%. Anybody has a guess? One guess? 10? 10, it's more. It's more than 10. I heard 30. This is 30%. So, you know, we obviously consume a lot in Singapore. We have lights everywhere all the time. Air conditioning is by far the biggest consumer and the biggest emitter for carbon in Singapore. So around 1/3 of everything we produce. So it's enormous. And so over the last 6 years, I work with some of the largest local, regional, and global companies to help them reduce their air conditioning consumption, because it makes sense financially speaking as well. And so basically, when we talk about aircon reduction, we talk about cost reduction, and we can even do it without any capex. So basically, you don't invest any money up front. We do the savings for you, and you just get the profit that is generated for it, and you just give us back a small percentage of it. So it goes back as well to Ben's question. This is an example of how doing good for our wallet and doing good for our planet.
And I think on the aircon side, I mean, with what's happening with temperatures rising, I think we're going to have to be to use it more and more, right? I mean, it's
and with heat islands, so in cities, temperature will be 5 degrees higher than what we have in another environment, because basically, since we lack trees, with the roads that is basically combining all the heat that is attracting the heat, the lack of trees, and also air conditioning, because when we are creating cold inside, we create heat outside. So all of it makes cities 5 degrees higher than what it could be just next to it. So obviously, over the next years, there will be a big issue in a climate like Singapore, where humidity is also very, very high. So basically, we cannot have very high temperature. I will maybe stop it here, but one big issue in Singapore, we often talk about heat, but it's if heat is too high, it can be a problem because humidity is already very high. And so if we combine humidity and heat that is very high, basically, we are boiling from inside. So if we have very high humidity, since we have very high humidity in Singapore, if we also have very high temperature, we will boil from inside, and yeah, that's not happy ending. So I will stop it here, and I will go back to Eleonore. Great activity, because we didn't talk about carbon market, and there is a big shift, and mainly in Singapore. And Singapore is one of the first country who wants to basically accelerate on the carbon market. Can you tell us more a little bit about this and how this can play a role for everybody in this room?
Yes. So I think on the carbon market side, I mean, so we're seeing that development. I mean, not just in Singapore, right, but it across Southeast Asia.
Yeah.
I think China has the largest carbon market, actually, but it's quite fragmented in the U.S. as well. But what we're seeing coming from Singapore is that there's first of all, there's a carbon tax in Singapore,
yes,
which and they've been increasing the prices over the years.
Yeah.
But recently, what they have been trying to do, which I think is quite unique and revolutionary, in carbon markets, is they've tapped into the Paris Agreement, Article 6, to come up with bilateral agreements between countries. So there's a whole bunch of countries in Africa and LATAM as well. And so we're able to, so for corporates who are in Singapore, they're able to offset 5% of their carbon tax by tapping into that bilateral agreement of the Paris Agreement. And so I think we're going to see a lot of other countries not working. A lot of other countries kind of on that path as well. But we're seeing a lot of development in carbon markets. And I think it's one of the ways that a lot of what we call the hard to abate sectors or companies will have to tap into in order to reach net zero goals.
Yeah. And then we I mean, blended finance is also a big topic in Singapore.
Yes, wherever you go, I mean, whatever conference you go to, the last 3 or 4 years, there's always a topic on blended finance. And the government is very fluent on blended finance. Yeah. The prime minister and even president, I mean, whatever, not just a sustainability conference, but they can talk very fluently about blended finance, which is what they want to develop.
And you talked about something very interesting when we prepared this talk. You talked about coral bond.
Yes.
What is a coral bond?
So maybe I'll just explain blended finance quickly, and then I'll move on to coral bond, which is an outcome bond, which is also part of kind of the blended finance space. So blended finance. So typically, if the world wants to reach net zero, we'll need financing, right?
Yes.
And especially in emerging markets, and a lot of projects. Investments in emerging markets are deemed too risky, especially for the private commercial sector. So what we need is the public or philanthropic capital to what we call de-risk those investments for them to become bankable, what we call bankable, and to attract the private sector in order to help finance that energy transition and other investments to reach net zero by 2050. And so that's why, Singapore is all over this because, for Asia, for Southeast Asia, I mean, we need flows to move into those structures. So there's been announcements at the different COPs, FAST-P, et cetera, et cetera. So moving back to coral bond, so that's what BNP is doing together with the World Bank. is we are helping the World Bank issue a coral bond, which is an outcome bond. So essentially it's a zero coupon. So I'm going to become a little technical here, but it's a zero coupon bond. So it's a 5-year maturity bond. So we as a bank, so we've put in money to help, kick off this project. And the one of the stakeholders with the World Bank is also putting money to kick off this project.
And so zero coupon money, I mean, it doesn't bring money.
So we don't have, the investors don't get any dividend, any coupon for 5 years. But at maturity, if we've been successful in restoring the coral reefs and what we call marine protected areas in Indonesia, 2 or 3, I think there's 2 marine protected areas in Indonesia, then we'll have to measure if we've reached that target, that KPI. If we're successful. At maturity, investors will be able to get their principal back and a success payment. So linked to that KPI of restoring, the coral reefs.
So you don't receive money for 5 years, but you receive much more.
We receive, so it's guaranteed by the World Bank. So there's no risk of losing your principal. And then we would receive a success payment. At maturity.
Another example of how to do good for our planet and our wallet.
Exactly. So that's quite unique. I mean, when I was at the previous employer, we did what we call the rhino bond. So it's the same kind of, the same vein. So the idea there was to help populate the rhino population in South Africa, in a couple of reserves in South Africa. So same principle, no coupon for 5 years, but at maturity, if we're successful, clients get their money back plus the success payment.
And anybody can invest in this type of projects?
So I think there's a minimum. So it's not, small, but yeah, it's quite accessible. And so what we are looking for, we're looking for donors who want to, participate in this project in form of grants, but also investors who want to invest into the bond. And that's been, I mean, so it's been announced by the World Bank. We're still working on the pricing because, as you can imagine, we really want to make sure that we can measure how those coral reefs have been, restored. And so it requires a lot of it's quite technical, right? We want to make sure that we're able to price this bond properly based on the KPIs that we will. And
that they last as well. It's not just another project that is financed and then is stopped. Is stopped quickly.
So that's an outcome bond. And so that we've committed to do, we're going to do more of these outcome bonds.
Yes.
So bonds where you're looking for a certain outcome at maturity. Around plastic. There's so many things, so many topics that you can address with these outcome bonds.
Very interesting. What is for you the future of sustainability and finance? So now we understand that they are linked, but how is it going to be in the next years?
So I think right now we're still, it's becoming more and more mainstream, but we still need a sustainability officer. We still, in a lot of corporates, it's still kind of separate. I think hopefully at some point it will become mainstream. It will be business as usual. And I don't think we're there yet because we're still transitioning, but hopefully that's kind of the idea is that it's part of business. Yeah. There's no other way really than doing business.
So it has to continue and it has to extend. I cannot agree more on this. Sometimes I have people asking me like, when is a trend of sustainability?
The hype, yeah.
No, it's not stopping. It's not going to stop. It's just gonna be there, and until we really found a way. It will not stop, or it will not going to be reduced at all. It will just be more and more intense.
And I think, on that, I think we've been witnessing this backlash on sustainability, on ESG coming from the US, right? I think it's just part of the cycle, right? As a space becomes more mature, I mean, it goes, there's correction, it finds its, yeah. So I think that's what we're going through right now. But if you speak to, there was Ecospiridia, just last month, right? Or a couple of months ago.
Yes.
And Asia is still very committed to this space. I mean, Singapore is still very committed, Europe, of course. So I think it's just,
it's just the beginning. Yeah. And, even if the wave might be a little down right now, we know that in 3 years, basically, when the when the president will change,
or maybe earlier, who knows? We'll have to watch this space. Yeah.
We talked about banks being net zero in 2050. When we work in sustainability, it's hard to believe sometimes. But you told me that you do believe in it. Tell us more. What's your takeaway on that?
Yes, I mean, so I'll talk about the bank I work with, right? And so if you look at our financing, our energy financing book portfolio, of clients in 2012, 90% was financing fossil fuel energy, right? At the end of last year, we were financing 75% of low carbon the energy, and the rest in fossil fuel. And by 2030, you want to completely switch this. And so you can't just commit to being net zero by a certain day. You really have to monitor, track, improve, fine tune. I mean, that's really part of
milestones. Yes. Okay. And so you see the milestone being achieved.
Yes. And we also had to have 200 billion worth of green bonds, sustainable financing by the end of this year. Yeah. I think we're at just over 180 billion euros worth of financing. So that means helping corporates, on their transition journey, help them decarbonize their business models. Yes. So they need finance. They need funds for that, right? So that's how banks can be, an actor in helping kind of the whole system transition.
Yes. Okay. I think we extended the time that we planned. But we still have time for Q&A because we are also here for this. So anybody in the audience has question? Magali.
Question. Thank you so much for the presentation or the talk. I'm really interested in these outcome-based contracts. And I'm just wondering, what does it take to really scale them? Because I guess for now, it's more like single cases. Yes. So does it mean that we need to read 5 hours of the first success cases and then basically want the results around? We can scale do more of these, but what does it mean?
Do you want to repeat the question first?
Yes. So the question is on those outcome bonds that I was referring to. So the coral bond that we talked about earlier. Yes. I mean, it's only going to be 150 million. I mean, I'll just add to what your question, but it's small in scale, right? And so exactly I think you're spot on, right? We need to scale up those different outcome bonds. And so there's a whole bunch of initiatives in Singapore, and also in Europe just announced, together with the Sustainable Finance Association of Singapore. There's different kind of working groups. One is on blended finance. And the whole kind of idea of that working group is to scale up all those different initiatives. So not just outcome bonds, but how can we come up with replicable, blended finance structures, models, so that we can not just, and have this in isolation, but really move the needle and really scale up that space. So there's a lot of stakeholders involved. So it takes time. Even for the Rhino bond, which we worked on when I was, in the previous firm, it took, forever, more than, I think, 4 or 5 years. This one, of course, is kind of the same model. So it's going to be quicker, but still we need to be able to replicate those.
Can I just follow on?
Another question. Go ahead.
So does it mean I hear blended finance now with outcome-based? So this means all of these outcome-based cannot work without blended finance? You don't even need to have...
No, you don't need to. But depending on the project, if you need to de-risk,
Very interesting. Any other question? Yes.
Same with the outcome bond, in particular the coral bond. You mentioned there is 0 coupon, but at the end of it, if KPIs are met, there's a return.
There is a bonus.
How much as a percentage is the bonus to the overall principal, and over what duration are this one?
What is the bonus on top of the coupon?
So we're still, I mean, it hasn't been priced yet, but I will follow up. I think we're aiming for hopefully August, September. But the idea is to have a pickup spread from because it's issued by the World Bank. So it's
It's not
almost, it's right. So it's going to be a small spread to World Bank risk. But we're still working through the mechanics, because once we've determined the KPI, then we have to reverse engineer and then, price this. But yeah.
It will be high enough for you to invest. That's what she said.
And I mean, the beauty of this is for anyone considering philanthropy, I mean, here it's an investment. So you're not, unless you're funding, and giving in the form of grant, but here you're an investor. So I think the beauty of this is that if you are, really much attached to SDG 14, life below water, you're passionate about ocean conservation, this is great, because you're not going to lose, hopefully not, but you shouldn't if it's a World Bank, right? Your principal, you're going to make a little bit of money, and then we'll be able to measure the impact, because that's the whole purpose. And a lot of times when a lot of, people that would do philanthropy, sometimes you don't really measure the impact and how you're making a difference. Here, it's really going to be structured and rigorous, and we'll be able to track that ocean conservation.
Do we have any other question in the audience? Or maybe everybody wants to eat. So then I think it's time to conclude this talk. Thank you very much, Eleonore. Thank you to anybody who made this event possible. So NUS Alumni Venture, obviously, ACE, BFRAMEPRODUCTION for recording this event, Biszu as well, who made this event possible. And thank you, all of you, for joining tonight. Thank you very much.
Thank you.
And enjoy the food. And most importantly, enjoy the people around you.